What's on the docket, buddy?
I was enjoying looking at some of the things that you guys were talking about before and be happy to give my take on it. Thank you for
Sure.
helping me switch from Monday to Friday and being accommodating. We were
Oh, yeah.
spent a few extra days in Florida after we went down for a bat mitzvah.
Okay. Yeah, they're always fun. I went to the best hotels in Chicago at 13 years old for all the every weekend I had a couple to go to. It was really a fun time trying to steal screwdrivers from the bartender. Um, anyway, Zach, so why don't you share your screen? And I did catch your comment when I brought up TLT, and you think they're going to hold here.
I would love for TLT to hold.
Okay.
Where is there we go.
So you think that maybe this was about it on this climb in yields. It was kind of a surprise for most
I don't
people.
know if it's it altogether. Well, we can take a look at bonds first,
Okay.
and then I do want to talk about RSP and some of the stuff in the market.
Okay.
So I think we're at least working on a larger bounce in. I look more at bond futures because we have a lot of our members that
Right.
trade that versus trading the yields.
Yeah.
Um, so in terms of the retrace from the move off of the October low, we came into the top part of the fib zone at a 382 retrace and a nice ABC correction that we followed down. It played out
Yeah.
perfectly, but if that had stretched a little bit more towards the 116, then it'd be a little bit more reliable as all of this B wave. I'm going to give it the benefit of the doubt, and this looks like a 1-2 start to a larger wave one of the C wave that I have pointing up towards the 140 region. But it is possible that we get stuck in the 124s and then have to come back down to test that 116 to 113 region as a
Okay.
wider flat. Since I
What
think,
would what would open you up towards the scenario where we take out the B low? Wouldn't that still be corrective?
yeah, I
And
mean
be
this
looking
was
for
enough for all of this orange B wave, and if
yeah.
if we take out the March low, then there's a good chance we're heading at least to 113, if not maybe down towards 110, and things start to get a little bit hairy if that starts to accelerate. But we got let me go to my larger time frame here. I mean, we have a pretty significant five-wave move down. And in
Okay.
the grand scheme of things, Garrett leans more to that being all of the fifth wave and five waves down. But even in that more bearish scenario, this really isn't enough
Yeah.
of a reliable bounce. So maybe we get that deeper retrace down to the 110s, but we should get more of a corrective consolidation before Armageddon and bonds comes. And this counting this as that cycle degree wave four here to get the all of the fifth wave is small. So either you're dealing with a deeper than ideal consolidation for a fourth wave, which is where I lean, or a much smaller fourth and fifth to complete the whole pattern off of the 1980s.
Okay. Appreciate your look. That's what makes a market.
Right.
And
But
you're always reassessing like we all are
yeah, I
every
mean,
day. Yeah.
pretty
Go ahead.
decent retrace. Let me clear up some of the stuff down to a 764 here. So if we're holding for whether it's higher for the B wave or for the third of that larger wave one, we should be holding this 118 200s now. And that would be the very first indication that maybe we're heading down towards that 113 to 110
Could could
even
the
quicker.
spark for the next bond rally be risk off,
I think
or
so.
are
I
they
mean,
both
we
trading risk
haven't.
on?
So I see things more rather than looking for specific correlation. I mean,
Yeah.
in sometimes with regard to the dollar, I look at correlation to the dollar as you have things that are priced in dollar terms. So if the dollar is going to be stronger, then you're going to have weaker price in dollar terms. With things like bonds, there is capital flow between different asset classes. And it used to be a pretty direct correlation that bonds were the risk off trade and that people
Right.
flocked to that safety. That kind of disappeared a little bit when yields were so
Oh,
low. People were
completely.
looking for safety and things. They didn't want to just park their money and have it, especially when the Fed's inflating it away. But I could see that coming back, that flight to safety, especially with yields, it at reasonable levels, in the fours and fives, to lock up some money for, 3, 5, even 10 years or whatever. Like it's not unreasonable to do that with a portion of your money that you want to think you're putting away for safety purposes.
Okay.
So I wanted to talk a little bit about equities. And the last time I was here, I'm gonna see if I can pull up um the
Be about 3 months ago.
yeah, it was at the beginning of December. I had the saved chart and I can't seem to grab that screen.
You have to stop sharing
No, that's not
sometimes
it.
and then go to that screen.
Oh, and then go to a different thing.
Yeah.
All right, let's try that.
See, we taught each other how to use Zoom today.
I know, there we go.
That's what a collaboration.
Um,
That's not working either, huh?
no, I'll
So,
just do I'll just show it on the chart that we were looking at there.
okay.
Let me go back to the RSP. Sorry about
So it
that.
was probably inaccurate. You
Um,
were probably bullish and it went to your target. It's my guess.
no, 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 no. We were at the beginning of December, we had to count this top in the RSP. The RSP is the equal weight version of the S&P.
Right.
But we're noticing some very significant divergence there with versus the skew in
Yeah.
the S&P itself. So we had this lower high here, which ideally counted as a B wave after getting 5 waves down off of the January 2022 high to a deeper consolidation than was reliable as any kind of fourth wave in a move higher. So we had a pretty significant move down, and then we had a pretty weak bounce as a possible B wave that needed to count as a more obscure WXY pattern. But we did have 5 waves down from that and a possible ABC retrace into the beginning of December at a lower high. So that was a spot where we could be pretty bearish, and we're started to get a little bit of a move down there, but it quickly invalidated.
Yeah.
And so there was very, very good risk reward at the beginning of December, being bearish, as long as it stayed under that July high from a year ago.
Yeah.
So,
You can't step
Garrett
into
and I
the
are always
ring.
looking for.
Yeah. You can't step into the ring and not expect to get hit.
Right, right, right. So there's a couple of things that we had some good bearish setups on.
Yeah.
Some of those got a little bit more of a move down from beginning of December, but and a lot of things invalidated, and we got this massive extension, which on the RSP very easily still counts as either the B wave. Just B waves, as we know, an L8 wave can make nominal higher highs, and this just barely has made a nominal higher high. And it can also be that alt fifth wave of the same primary wave five. And so um, we do have 5 waves up that we can count off of that October low now, as this bigger ABC move up, whether it's the parentheses 5 or the parentheses B wave. There's a little bit of room for more extension. So I really like the way you put it, that you were very aggressively neutral. So no support's broken yet. There's no clear setup off of a high, but there's a number of sectors that Garrett and I are looking at that we're very, very concerned about. And in general, for equities, the risk skew is very unfavorable right now. So there's no clear setup to be aggressively shorting yet. There's some speculative plays out there, but everybody should really be on high alert for the another start to a
Is
move
this whole
down.
thing an expanding flat? Is that the right
Um,
terminology?
so Expanding, I mean, I think that that's possible for a lot of things that we look at where this is a larger third and this is the B wave of a wider fourth wave bounce. I'm going to go over to the S&P because I think it counts very differently at larger degrees. So it's harder to call that an expanded flat. It looks more like this is just the fifth wave extension of the primary wave five. And this is five waves up completing off of the 2009 low. Make this a little bit bigger here. So this was deeper than ideal as the fourth wave. It also was easily five waves down. So to count that as a fourth, it has to be a very obscure triple combination pattern instead of a leading diagonal down. But this was largely fueled by tech, and this part of the pattern as an ending diagonal extension matches very closely with SMH and XLK, the general tech and semiconductors specifically, to fuel that extension, which makes sense because of the Magnificent Seven and NVIDIA and everything else. So,
Okay, what would
but in
give you a
terms of a
sell
larger
signal?
degree,
Are you looking
at
for
this
50?
point,
Yeah, go ahead.
at this point, I think the first indication is probably going to be a break. The first clear break of support is going to be a break under like the 4930s in
Okay,
the S&P.
4,800 prior high.
That's where it
Yeah,
starts to get, yeah, that's
yeah.
where it starts to get too deep to be another fourth and a fifth wave extension on this chart. On RSP, I think that was what we were looking at just a minute ago. 162s on the RSP is really where it needs to hold to get the smaller degree immediate extension. But starting to see a lot of different divergences on different time frames, and it's very, very concerning.
How about the
And in terms of
Russell?
larger, oh yeah, so you guys were talking about Russell a lot, and let me go to the back adjusted. I think that's I don't see how anybody's looking at the Russell as being very
Bullish.
bullish.
Yeah,
It seems to be the most clearly divergent of all of the major indexes. With there was a good chance that this was all of the B wave as a triangle, and we got
yeah,
five waves down from there, and a very clearly corrective start into and a little bit of extension there into the last time I was here. That got blown out in favor of the wider flat. And this definitely is an expanded flat for the B wave off of, oh, there we go. Off of the June low from a year and a half ago, or 2 years ago, sorry. But five waves up completing and very much into the normal resistance region that we see for a B wave. It's significantly divergent lower high from where it was
yeah.
back in the end of 2021. And I think I forget who it was that I saw talking about it. But the Russell seems to be kind of like a doomed index in general. That you have anything that is like SMCI that shows promise
Yeah.
and gets bid up to graduate to more than small cap, gets moved out of the small cap index, and then you're left with junk again.
Yeah, a lot of
Not to
regional
say that there aren't good
banks.
companies in there.
Yeah, a lot of regional
Yeah,
banks in
that
there.
was another area.
And that looks
Um,
very ugly to me.
that
Looks like just an ABC we had, and we're rolling over again.
Yep.
You think you see that
It
too?
couldn't even get a fifth wave up. Yeah, the KRE index couldn't even
Yeah,
get the rest of this fifth wave up towards the 618 retrace for the B wave. That to
yeah,
me looks like it's incredibly weak if it's going to truncate in the fifth wave of a C into that fib resistance zone. And so the downside projection on something like the KRE is pretty nasty. A measured move, well, it's not going to be all the way
yeah.
down
Well,
there.
bankrupt.
Measured move is going to take it down into the 20s, into the low 20s.
Yeah.
Um,
Okay.
that's not to
Get
say
ready
that there
for
aren't a
some.
couple of good banks out there.
Yes. Well, where are they? I'll move my cash there. What bank? Where do you bank?
I
Because I
found
know you
National
told
Capital
me
Bank. I mean,
you
obvious.
you told me Avi's doing a piece on safe banks,
He
right?
did. He's doing a lot of research. There's a guy he got to do a lot of fundamental research to really comb over the balance sheets and find some that are have very, very limited loan exposure and are focused on keeping customer deposits safe. I stumbled upon National Capital Bank a couple of years ago. They're local to the DC area. Not as convenient as going with like a Bank of America, but you know, they do have some online banking and stuff as well, but they don't lend mortgages to anybody who isn't a depositor. They're not and they're not going out doing a bunch of risky commercial real estate and stuff like that. But
Maybe you could send me that
XLF, another
piece.
one that, yeah, of course.
Email it to me.
Of course.
Thanks, man.
Um, so there's a few things on in the XLF, like JPM looks
Yeah.
like this is a larger A wave and a B wave, and it's working on a C wave to get a slightly larger version of this primary wave five. So it can get a fourth and then a fifth wave higher. But the XLF and a lot of the big banks definitely look like they're coming into more significant tops. Again, there's no support broken yet.
Right.
So, you know, we're going to look for that first five waves down and three waves up to be a smaller degree, 1-2 start to a possible wave one of a C wave down before we start to look to short anything.
Okay.
But certainly some concerning looks out there in the equity land. We also just talked about XRT. And you know, it fits very much with like the small caps where this is significantly divergent at a lower high from highs that we had at the end of 2021. Very indicative of a B wave into normal resistance zones that you'd expect for a B wave
What
to
is that an
stop.
ETF
Um,
on, Zach? XRT.
XRT is retail sector.
Okay, retail.
So possible support in the 69 region for one more high because this does need to count as a WXY. And that's, you know, usually your corrections in Elliott wave are ABC moves and you have five waves in the C wave. So sometimes you get what looks like a completing pattern that only has three waves in that what would be the C wave position. So you count that as an ABC and a Y wave. But we always allow for the potential to get that fourth and fifth. So we're going to be looking to see, does this look like it's starting to get five waves down as a wave one start of this wave one? Or is it looking clearly corrective into that possible 69 region of support to warrant a play for an extension towards the 82 region?
So the miners have had a very powerful first wave out of the hole. Are you on that
Uh,
page? That
yes.
that's like
We can
wave
talk about the
one.
metals too.
Yeah.
I actually am on the fence still about calling this a nominally higher low for an alt wider version of this wave two, since this was not the best five waves up and this retrace came so deep, but it did hold as being valid still for the 1-2 start to the third already. So this it is certainly a wave one, but it may not be necessarily wave one of this three. It can already be wave one inside the heart of the third of the third. So you know, I would like to see a little bit of a move higher into the 30, close to the 32 region, and then a little bit of a consolidation. But if we are inside the heart of that move, the gentleman's entries, as they say, could be few and far between. So may get what looks like that more of that fifth wave extension of wave one, but it just decides not to turn back. So a lot of really, really good setups in the individual names that Garrett and I are following closely. And some of them only just, you know, Newmont, like the weakness that we saw in GDX was probably a lot of that was because Newmont was filling out this ending diagonal down to 618 retrace and only just looks like it bottomed.
Yeah, it
So
had the weakest rally.
that's but it, you know, it really is the bulk of GDX and has the biggest pull on the market.
Okay.
So
So you're expecting, you think we're
this
done
is
with wave one and we'll be into a pullback in Newmont from here? Or well,
I mean,
that
a
would be a
very, very small
gentleman's trade.
degree.
Yeah. Okay.
Yeah, I mean,
28,
this is it
32.
wasn't a clean five waves up.
Okay.
Yeah, 32, low 32s would be the most ideal.
Yeah.
And that's going to be a wave two inside what's
Yeah.
probably a leading diagonal for wave one of a bigger wave one.
Yeah.
Or it gets an ABC up for wave one of a leading diagonal for the parentheses wave one, but really, really good risk reward off of that low in the 29 region for Newmont. And
Do you think the
Mark just put out an
oh, go ahead. I'm sorry, Zach. Go on.
Oh, no, no, go ahead. Mark just put out an article on Seeking Alpha um, on Newmont. So he's writing
Okay.
articles for us, and it's a good article.
Okay. I forgot what I was going to ask you. Oh yeah. You know, are you old enough to remember when platinum traded at $1,000 premium to gold? Because it looks like that
Um,
that spread might be turning here.
I Platinum is certainly pretty weak, but has potential to be still working on a major wave two as a 1-2 start to this bigger diagonal off of the 2020 lows.
Okay.
Um, but I think we can get some more weakness first, where
Okay.
it's gold is at
New
about $1,000
lows.
premium.
Yeah. All right. So you're looking for new
Right.
lows in platinum. How about silver?
Not
Really?
aggressively.
Yeah.
I mean,
All right.
it's technically it's holding. I mean, this was just a very, very weak move off of a very deep retrace. So,
All right. How
but
about
it is
silver?
still valid.
Because we're
Um,
up against the clock now. Silver look better than
oh,
platinum.
okay. Yeah, silver looks pretty good. Really nice five waves up here. Can get a fade back to the 23s. But I wouldn't be aggressively looking for that retrace. If I'm lightening up a little bit, and looking for some consolidation to get back in, for whatever I lighten up, but not aggressively, certainly not looking to short silver right here, for a smaller degree wave two.
Yeah, because the gold silver ratio fell apart this week.
Right. And I'm looking for that to head a lot lower.
40.
I would love to get it down into the 50 region. I don't know about
Okay.
40s, but
All
that's
right.
that's going to take a while to get there. And so far we really haven't seen um
It hasn't
silver
broken down
really
yet.
outperform. Right.
Yeah.
I'm wondering if you guys have talked about the very noticeable difference between gold futures and a lot of the gold ETFs. Because
Haven't.
the futures got this massive spike in December. And
Right.
so for them, that looked like all of this A wave. But the GLD ETFs and all the other, gold ETFs look more like they're finishing up five waves up as this C wave for the larger version of the A wave only now into that same region that the GC futures spiked at the beginning of December.
Okay. No. So what's that mean?
So that I'm not exactly sure. I'm tracking both potentials, on GLD and the ETFs, they should get more of a 4-5 and then allow for at least a wider consolidation. It doesn't necessarily have to be so deep, but as this larger degree, minor degree B wave. Whereas on gold itself, well, at least on the futures, um, ideally those count better as wave one of the larger degree C wave already and are going to hold a smaller consolidation as wave two, as opposed to getting a B wave that might come back down into the low 2000 region.
Okay. Yeah, I like that level if
But
we get it.
right. I mean, but certainly on looking at other momentum indicators, this is a pretty strong move, that
Yeah.
flip momentum back into the bullish case for gold in general. And hopefully the miners start to take advantage of that,
The
and
silver
as the
miners
kind of
like
leverage trade that they are.
Endeavor and what's the other one? Fortuna. They've had dynamic
Yeah,
moves.
Fortuna's great. Wheaton, I like Wheaton a lot as terms of a more heavily weighted silver miner. It got past this resistance for the potential for one more low. Very much like GDX, though, it came within a few pennies of invalidating the one
Yeah.
two of wave three off of the October low, but that still holds as valid. So you can count this as an alt wider running flat for the wave two and be restarting this degree wave one, but at the end, that really doesn't quite matter. I think this is probably enough for wave one, but I wouldn't mind
SILJ
being
actually took out that low like with a stop hunt under $8.
right. Yeah, I don't. I like to look at the individual names. I mean, I
Okay.
like GDX and GDXJ, but SIL and SILJ, there's just too few names to get a real accurate reading for an actual index, and so you get some skew issues, with
Yeah.
it breaking that low, and so it's restarting something new off of that. It's not as reliable. I'd rather trade the individual names.
Well, you know what is reliable? You making your presentation and talking about alternates at the same time. And what you like, most people will just talk about the wave count. You'll even embellish it with confidence level in the wave count based upon price action. So really appreciate you coming every time you do, Zach,
Thanks, Dale.
edifying our
We
community.
do really like energy names, if you have another minute.
Oh yeah, we do.
Um, we we
Yeah,
were looking for a fourth wave consolidation. We initially wanted it to be an A, B, and a C wave down into the 60 region. But it filled out as either the running flat into the June low
mm,
here, or a triangle into the January low more recently. And again, XLE is an index, so there's charts, individual energy charts that argue more for this being the low, and plenty that argue more for the triangle and just starting the move up as the fifth wave off of that low. But a lot of them, certainly all of them, should be holding the January lows at this point, whatever low they made in either of the way of counting that,
yeah.
and are looking really, really strong off of that low. Most things we're counting as a larger diagonal. So the fifth wave should be an ABC move, and a lot of the ones that do look like they bottomed back here in May or June look like an ABC up for the larger A, whereas the stuff that bottomed here in January can be working on just five waves up for that A wave. And a few things look like they can get a five wave fifth, but for the most part, there's a lot of agreement in most of those energy names, and a lot of them pay some great dividends. So we've been following a lot of those very closely, and that's the bulk of our newer wave setups for any equities in the last couple months have been in the energy sector.
Interesting. You get paid while you wait with the dividend,
Exactly.
right?
Which we're not fans of chasing dividend in general. A lot of like the REITs and other stuff like that, especially the commercial real estate ones, look terrible.
Yeah.
But now that we've had the better part of 2 years of a nice consolidation, a lot of these energy names look fantastic.
All right, let's wrap it on that. You think it has to do with the Middle East could be a problem this summer? I've heard that oil demand has increased in Europe quite a bit, which is, counterintuitive to all the recession talk we're getting about Germany.
Right.
So, uh, the WTI trying to close over 80 for the first time in a while. Does that line up?
Yeah,
I mean,
I follow crude futures a little bit more than WTI.
mhm.
I'm actually going to look at my USO chart because it's a lot cleaner. My oil futures chart has a lot of smaller degrees on it that make it pretty crowded. So this can still be just wave one, a little bit
Yeah.
higher here as an ABC up. I'm certainly open to being further along in a C wave off of the December low. It's a little bit too big now, certainly in crude futures for this. Initially, I was looking for this to be 1, 2, 3, 4, and a fifth wave of a leading diagonal. For wave one, now it looks more like this is ABC up for wave one of an ending diagonal for the whole C wave. But some things, more of the energy names in XOP fit this potential where they can try for some of a wave two. But some of these can be already, this can be wave one and wave two, and this is an AB, and it's starting the third of the diagonal already off of a smaller start. So crude is a little bit harder to count that way because this was so much smaller relative to what we normally expect for wave one of a diagonal. But certainly, even though there's some potential for a little bit of chop in the near term inside the start of this move, it should be resolving nicely higher towards the 90s in USO and on crude futures. That takes it up towards the 102 region as the measured move.
Okay. Thank you so much, Zach. How do people find you?
On Twitter at ZACMANNES, or whether on Seeking Alpha or at ElliottWaveTrader.net, you can check out Stock Waves and the Metals, Miners, and Agriculture service. And I share general equities, S&P, and some stuff in the main room there as well. And the bonds.
Did you know that R.N. Elliott was OCD, obsessive compulsive? Do you know why?
That tracks.
He had to
Why?
wave. He had to wave at everyone he saw.
I like that.
I made it up.
Like
what
that.
do you expect? I'll keep my day job. Anyway, thanks again, Zach. Hope this is a great year for you, and appreciate your hard work. Zach
Thank you very much,
everybody.
Dale. Good to be on as always.
Okay, buddy. That's a wrap, everyone, for me for the week. You could join the team in 9 minutes on the Morning Edge, and people are thanking you. Zach, you probably left already, and you're welcome, everyone. Have a good weekend, and we'll see you on the trading floor next week. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.